Happy Easter. It is Easter Sunday, and we're going to look at the S&P index so we can try to get a feel for what's going to happen this coming week. So looking at the chart here, we can see we've got a couple of lines. We've got a horizontal resistance line. We've got a ascending trend line. We also have our 50 and 200-day moving averages on it. So we can see this green line is our 50-day moving average, and we're crossing over this 200-day moving average, which is a bearish sign for stocks. In this case, it's the index. Normally, when we have this pattern right here show up, then the stock generally falls off. That's the end of the run, right? But in this case, it looks kind of awkward. Why? Because we've got this death cross, is what we would call it, but we've also got, it looks like a V-shaped recovery here, right? This is our S&P. So we've got point 1 and point 2. It takes 2 points to make a line. So now we have this trend line here. So what are we looking for? And I'll show you where I got this resistance support line. It was a support as long as the candlesticks were above it. But now that we've breached it and come below it, it is a resistance or a ceiling. So we'll look at where I got that in just a minute. Okay, that being said, we are going to come into some resistance around this trend line, around 29.37, and our 50-day moving average, which is 29.09. So as this candlestick approaches these two marks, it's natural it's going to pull back from them, right? And this is like a double resistance right here. As we move up, we're going to have to breach them both. Now, if it falls back, you would think in normal trading, if we continue the trend, following this trend line right here, we would fall back and simply we might test it and then continue to walk higher, right? Depending on what the news is. So I want to show you where I got the resistance line. So I'm going to pull this chart back. So I went all the way back to 2018 right here, and I locked onto it. There's point 1, there's point 2, and then we come across. What authenticates this line, and I like to go back in time when I look at charts, and I've said on a previous video, I might go back 20, 25 years to find what I'm looking for. So when we look at this, that horizontal resistance line, right, that ceiling, we can see when the market started to fall, we breached it, but we closed above it. And then the following week, we breached it, and we closed above it. And then after that, it was just every man for himself, right? We just fell straight down, and now we've started recovering. So you would think, we've got the perfect storm right here. We've got a V-shaped pattern. We've got an upward ascending trend line. We're fixing to run into the 50-day moving average, and we've got a strong resistance. And one thing I'd like to say is Powell, the federal chairman, has says we are going to print to infinity and beyond, which I think he should retract that because that's a plagiarism. Buzz Lightyear said that first. But anyway, he has said we will print whatever it takes indefinitely to hold this market up. And they can probably do it. They're just devaluing our currency. So let's look at some of the things that this chart's up against, even though it has Fed Powell holding it up from beneath, right? Well, we've got massive claims in unemployment. We're going to look at the Fed here just for a moment. Here's another chart. We can see this is our trend. Speaking of trends, this is unemployment claims, initial claims. And then right over here, present, in today's time, if we move our cursor over here, wham! See that? 6,867,000. Over here we see 6,606,000 unemployment claims. So we go hyperbolic, straight up vertical, wham, That's incredible. We have all these people that are right now currently unemployed, and this market's going to get, as far as I'm concerned, the Fed might beat us all out of everything, beat the barnyard snot out of us, who knows. But right now, we have earnings are going to fall in the next reports. We have more people that have yet to file unemployment claims. They're coming. You have restaurants shut down. Their supplies are shut down. Their employees are sitting at home. Everything. The airline industry, cruise ships are shutting down. So there's absolutely, monetary velocity has almost come to a complete stop. Credit Suisse has said that the economy is going to shrink by 34% the next quarter. Goldman Sachs said it's going to shrink 24% the next quarter. We just saw the unemployment graph with 6 million people. We've had 7 major companies file bankruptcy already this year. These jobs are gone, and everybody's going to automation. Some of the companies you might be aware of: Airfare, Pier 1, Modell's, Lucky's, and that's just the beginning. We've got a lot of BBB bond rated companies out there. So anyway, we've got a V-shaped recovery. We've got some real dark clouds. We just talked about them. We've got a resistance in the horizontal ceiling, and we're going to have a resistance right here on this 50-day moving average, right? So let's see if Powell and infinity and beyond can overcome all the bad news that is breaking these days. Anyway, so it looks like we're going to go up at least to 2909 to 2937, where our resistances are. If it does retrace before we get up there, we expect it to hold this trend line, right? And then once we hit these 2 lines right here in that proximity, I expect some serious resistance. Charting's a science to a degree, but you can miss some, right? You can't hit them all. So this is a tricky area. This is a trader's market, so be careful. And one thing I like to show as far as time, when I go back all those years, is I just want to show the overall pattern. I'm not looking over here to day trade. I'm looking at, a week to a week and a half to 2 weeks. So let's see what happens. I hope you've had a great Easter. I hope you stay healthy, and I hope you maintain your employment. Thank you very much.